Let's now check in with the management of KEC International. I'll ask my producer to show you the intraday chart of KEC. The earnings have certainly come out well. Look at the sales, it's up almost 29%. Profit after tax is up 35% year on year. EBITDA margins, that's coming at 10.1%, down from the 10.6% recorded last year. So why is it that KEC International is getting a thumbs down from the markets? Stock price is down 5%. Rajiv Agarwal, the CFO, joining us here. Hi, Mr. Agarwal, always a pleasure chatting with you. If I look at your numbers, the sales figure has gone up, the bottom line has gone up. Why do you think you're being punished by the markets? Could it be because of for the small contraction that you've seen in the margins?
No, margins have been 10.1%, and if you look at the margins that we have achieved last year the margin was 9.3%. So from 9.3% we have improved the margins to about 10% this year. So our margins have gone up by 70 basis points for the year as a whole. For the quarter Q4, the margins are a little down compared to 10.4% that we did in Q4 last year versus 10.1% that we have achieved this year. Main reason is that our revenue growth in railways is significant, and railway business is still catching up on the margin front with the T&D margin, and that is only one of the reason that margins are slightly lower compared to the last year, but overall the margins have improved by 70 basis points.
Okay, so that's as far as the margin stories goes. You talked about the railways, but I want to now get you on the future of the order pipeline. What is it looking like? Right now, strong order inflows in Q4, 17,200 crores. But talk to your shareholders, talk to the viewers of ET now. What can they expect in the new year? What's in the works at the moment?
So next year we are expecting a top line growth of about 15%, and margins are close to about 10%.
Okay, let's also talk a bit about the sales growth target that you have for FY19. You're fairly confident target that you've set for 15 to 20% growth. Do you see this target getting revised upwards given the kind of strong order inflows that are likely to be in the pipeline?
So basically we have a strong order book, as you know that 17,300 crore is a closing order book that we had, and last year we had a good order intake, close to about 22% order intake at 15,000 crore. So on the basis of the good order book that we have in the beginning of the financial year, we are quite confident of achieving 15% revenue growth for this year. Another point that I would like to highlight is that last year we have booked some of the orders which are a long execution duration, and also some of the revenues will accrue in FY 2020 also, and due to that we are giving a margin revenue growth guidance of about 15%.
Give us a sense of your presence in the international T&D market. That's where you continue to expand your presence. Tell us a bit about the revenue contribution and the growth that you're seeing from international markets and what you are targeting in the coming few years.
And the international front, the last year our order intake was not that great. In fact, we were facing some of the headwinds in some of the market that we have been operating, especially in MENA region and also in some of the African market. But in the SAARC region we did very well, and we had a good order intake in the Indian market as well as in the SAARC region. So this year we would be focusing more on the international market to improve our order book in the international market.
Okay, so if I currently look at specifically, I'm coming back to your railway business because that's what you also outlined for us at first. The railway EPC backlog is at 3600 crore rupees. How much can this grow by? Because you talked about the outlook that you see for the sector at large.
See, our railway order book has increased by close to about 4,000 crore last year. So we had a good order intake from the railway business. Our order book as of now is close to about 5,000 crore with the latest order that we have announced yesterday. So our closing order book, present order book in railway business is about 5,000 crore. On the back of this order book, we expect our revenue to virtually double in the current financial year from about 850 crore revenue that we achieved last year to close to about 1,500, 1,600 crore in the coming year.